Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme, miscellaneous trivia. Today we do have an extra special guest, Tyler Wennet from Pacific Private Money. Tyler Wennet is the Director of Business Development and Marketing for Pacific Private Money. His expertise lies in real estate debt, including both performing and non-performing loans. He's played a key role in structuring private note offerings and launching digital trade desks within the private lending space. We'll get into that a little bit more when we have our interview. Known for simplifying complex strategies, Tyler has collaborated with financial advisors, family offices, and retirement account custodians to bring clarity and access to the world of debt investing. He's passionate about helping clients find smarter, more resilient ways to grow their wealth outside of the stock market. A proud husband and father of 2, Tyler brings a down-to-earth approach to an industry that's often anything but. Hey, Tyler, welcome to the Best of Investing.
Thanks, Edward, for having me. Appreciate it.
Well, you and I have known each other for a couple of years, and I've really appreciated how you've been working. So how did you get started in the real estate lending and debt investing space?
So I came from a background in sales, ultimately worked for a development company that kind of specialized in hospitality. Then COVID hit in 2020, which pretty much wiped out the hospitality market, right? No one was building new hotels and renovations got put on hold. So ended up kind of transitioning to oil and gas, which is a kind of a unique alternative, investment class. And to be honest, I really enjoyed the investment side of it, but didn't really have a true connection to the oil and gas, being from Arizona, born and raised. So that kind of spiraled into real estate, which I think ultimately is probably the most familiar asset class in the alternative space. And then found my way into debt in the non-performing space, and then ultimately started working with Pacific Private Money, worked alongside you for a long time. And then got kind of into the origination side, more of the hard money business. So kind of went full swing, I guess, in a sense, but yeah.
Now, what makes private mortgage lending different from traditional bank loans?
I've worked alongside Rick Culp, who's our senior underwriter at Pacific Private Money. I mean, he's been there for about 12 years or whatnot. He's taught me a lot on this space, because I came from, getting a home mortgage, right, where it's, I've always been able to qualify for anything. So on the investment side, with the higher interest rates and whatnot, and Pacific Private Money specializes in bridge loans, consumer and business purpose. But it's more or less the speed in order to transact, right? When you're in the investment space, time kills deals, right? So I think, private lending is a lot more it's a lot faster, it's more flexible. It's not really driven truly on credit scores. We particularly focus on the equity. So you don't have these perfect bank borrowers, right? Again, you just have the true hard money space in the private lending. So.
Gotcha. Okay, well, great. We're going to go to our first commercial break here. I do want to make a mention here for Action Whitewater Adventures. They provide the best rafting experience in the North Bay, from beginners to more advanced rafters. Check them out at actionwhitewater.com for rafting trips. Our first trivia question to win the tanning certificate, which is worth, by the way, over $100. And again, Tyler, if you know the answer, don't say anything quite yet. And no looking it up on Google. All right. On which planet would you find the highest mountain in the solar system? All right. On which planet would you find the highest mountain in the solar system? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my special guest, Tyler Wennet. Our first trivia question: on which planet would you find the highest mountain in the solar system? What do you think?
I'm just gonna say our planet Earth. I mean, it's probably a stupid answer, but I'm just gonna
Okay, so actually, it's
probably
not
like
Earth.
third on the list.
It's Mars, and the highest one is 16 miles high. It's 3 times bigger than Mount Everest.
Wow,
Yeah,
that's
that'd be
crazy.
quite a trek.
Yeah,
Before we get started, I do want to make a mention here also for the Transcendence Theater. They have some awesome Broadway type shows coming to Sonoma in an outdoor theater. I've been there many times. It's a fantastic venue. It's like watching a Broadway show. I always love going there. Go to transcendencetheater.com to check out the various show dates because they have a few different dates, Best Night Ever and Carole King, and a tribute to her, and Ladies of Broadway. I mean, they always do a fantastic show. It's always a good show. Transcendence Theater. All right, let's see. We're continuing on here. First of all, you mentioned that before in the last segment that you were working in performing and non-performing.
yeah,
NPL.
that's correct. Yeah,
Give a little like definition so that people understand what the difference is.
yeah. I mean, the simplest non-performing loan is a non-paying borrower, right? So somebody that has stopped paying the lender, and then a performing loan is ultimately a borrower that's still paying the lender. Of course, I mean, I don't know if there's quarterly payments, but typically they're always monthly payments. So
Yeah.
let's keep it simple. That's the basis of it. But
How often do you deal with non-paying borrowers and turn them into paying borrowers? Because not all the time it's going to, just be an absolute foreclosure, kick them out of their house deal.
no, great question. I mean, I think in the non-performing space, I definitely think there's, what's preached is that's the first option, right? Loan modification, turning whether it's depending on their, credit worthiness, their job situation, their ability to repay. And then, I mean, again, you got to think about it from a lender standpoint. What's the yield going to be and how you can modify that loan to still be profitable as a lender, but also keep that person in their house. And it varies, right? I mean, you're extremely knowledgeable in this space, and I think ultimately that's the easiest way is if you can do a loan modification. If you buy it at a discount, right, and you can still keep that borrower in your house, it makes you feel good.
Sure.
But there's so many different factors that come into play. So it's truly case by case, I would say, in a sense.
Gotcha. Um, mortgage debt funds, why do people invest in them?
Yeah, there's two ways of investing in debt. I would say from a mortgage standpoint, you can invest in individual loans, which we've done together in the past, and then ultimately, you have more direct ownership, and then there's mortgage funds, which is ultimately a sponsor, an operator, whatever you want to call them, fund manager that goes out, diversifies the investor capital, right? So the investor capital is pooled among different investors. And then they go out and they're originating loans like Pacific Private Money, or they're buying whole loans, which Pacific Private Money does as well. They do, the Pacific Southwest Note Fund buys non-performing loans, which, in a mortgage debt fund, truly your due diligence is 85% the operator, and so it's more or less, but it also builds in diversification.
A quick correction. I think the Pacific Southwest Note Fund buys not just non-performing. I think they also buy performing loans.
Yeah, okay, yeah. No, I mean, I know that was re-performing long-term loans for the Pacific Freedom Fund.
Yeah, generally long-term
focused on short-term bridge loans. Yeah, correct.
Gotcha. Okay.
Yeah.
And so give us a comparison about investing in trust deeds. How do they compare to a fund? There are pros and cons basically, and then also the, potential yields.
No, I mean, trust deeds, I've been in this space more and more when you when you have a very educated investor, sophisticated, has knowledge in this space. I think they lean more towards the trust deeds because they do have direct ownership, right? And then but it's kind of and there's we have a ton of trustee investors that have invested us with 8 to 10 years. We put out a loan product, they understand what they're seeing, and they instantly want to invest. But most of the time you're kind of responsible for doing your own due diligence, right?
Yeah.
You're looking at the borrower, you're looking at their credit, you're looking at the valuation of the property. And I think ultimately, that's attractive to, again, a variety of investors, but business owners that have had more control, right? They have control of their business. Maybe they're, a high level executive, versus more of, not trying to pigeonhole, but like a retail investor, where they don't want to have to go search for the next trustee to invest in, right? Because it's paying off, and then they have to keep that money working for them, because there is that downside between a loan payoff and then investing in a new trustee.
Yeah, having money sitting around in cash, as they say. All right, here's our second trivia question. Which chemical in your body makes you blush? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. And by the way, Tyler, how do people get a hold of you if they're interested in either trust deed investing or mortgage investing?
Yeah, it's the easiest way is to visit our website, pacificprivatemoney.com. We have a whole page set up to kind of describe the 3 different funds we offer, and then also a trust deed page, simple form to complete and everything. So.
All right, audience, stay with us. The Best of Investing will be right back. Don't touch that dial. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Tyler Wennet from Pacific Private Money. Our second trivia question: which chemical in your body makes you blush? What do you think?
Should have looked this one up on Google so I get one right. I would just say blood flow, right? I mean, I know it's
yeah. I mean, that's actually.
But I guess it's technically not a chemical, but
it's adrenaline.
Oh, really? Wow.
Adrenaline actually makes you blush. Yeah, that's interesting too. All right, so Tyler, we're talking about investing in trust deeds, mortgage investing, performing loans, non-performing. Let's go to the non-performing ones. So what are the benefits of investing in a non-performing loan? Because you mentioned basically a non-performing loan is where the borrower is not making payments.
Yeah, I would say it's probably the highest risk. But ultimately, I mean, in the investment space, the higher the risk, the higher reward, right? It definitely takes a much more sophisticated, knowledgeable person in this space, a legal team, an asset manager. It's not something you're gonna. I mean, there's a lot of individual investors that buy NPLs, but I mean, they also outsource a lot of their services too. So, but I think the benefits from, you typically. Markets change, right? I mean, you were around. I always talk to so many people, and they're like, "Oh, I was back in the '90s, and we'd buy these things for 25 cents on the dollar." And I mean, that world doesn't exist anymore. But ultimately, when you're buying a non-performing loan, you're buying it at a discount, right? So it has more potential for the upside. I would say there's, when you buy a performing loan versus a non-performing have multiple exit strategies, like we were talking earlier about the loan modification. If you get it to a performing state, and season the note, there's potential to resell that note to a performing buyer. And then ultimately too, I mean, if, push comes to shove, bad borrower, you can ultimately foreclose on the property, take that back. And then depending on what type of investor you are, you can either sell that or to a fix and flipper or somebody that, has a rental portfolio, or turn it into a rental yourself. Right. So there's, I think, the multiple exit strategies, but again, I think, it takes somebody with extreme knowledge, to enter the non-performing space versus, buying performing loans. So I
And
mean,
even
it's
in the 90s, I don't think there were too many first mortgages that were NPLs that were selling for 25 cents. Maybe
no, it's
second.
true.
It depends on how
Yeah.
big the loan to value. Because boy,
Have you
yeah.
have you ever bought seconds? Have you ever dabbled in that space or?
It depends. It's funny. The very first one that I ever got involved with was like my own situation back in 1985, where I bought a
Okay.
condo. I didn't have enough money to get. I basically had to put a down payment. I had to assume the first mortgage because it was only at 7 7/8 when interest rates were 13%. So it was a fantastic deal.
Oh wow. Yeah.
Yeah, and the balance was uh, I don't remember, like $12,000. And so I had the seller carry back the mortgage for like a 12% interest rate, no payments due in 2 years.
Oh
And
wow.
after 1 year, I went to them and I happened to have a little bit of extra cash. And I asked the borrower, I said, or I'm sorry, I asked the seller,
Lender.
lender in second position. I said, I've got money now. I don't know what's going to happen in a year. If you're willing to give me a little discount, I'll pay off the loan now.
Yeah.
And they accepted. So effectively, that was that was a
You're-
second. I was the buyer, basically, right? Because I bought my own loan at a second.
Yeah.
Generally speaking, if I understand it correctly, it's not a good idea to do it in Texas because there's certain rules in Texas, like the first doesn't have to notify. I'm not an attorney. I'm not an expert in this area.
Yeah.
We're just told that don't dabble in seconds in Texas.
In Texas. Huh.
Yeah.
Interesting. Because that's where you want to buy first at though, is in Texas. So it's,
Yeah.
Yeah. State laws are, so hard. So they're so different. I think that's ultimately gets a lot of people. They have to have a geographical focus of where they buy.
Well, and Texas is one of those places. That's where the Pacific Southwest Snow Fund started out.
Yeah.
The benefit is Texas is very good from a lender standpoint, whereas California and New York and Connecticut are very good from the borrower standpoint.
Yeah.
And
No,
you take advantage. It's one thing to have a real hardship and try to get a break from your lender, and most lenders are going to be pretty good nowadays. But it's another completely take advantage. I've seen situations where people haven't paid their mortgage in 20 years.
Oh yeah, no, and
It's just
not
ridiculous.
naming states, but New York is one of those states where.
Yeah. And then during COVID, all bets were off on that. Tell you what, let's go to our next commercial break here. Trivia question. All right, Tyler, so far you're 0 for 2.
I know, I gotta look this one up.
If you get this one, you'll be 1 for 3. And as I said before, that'll get you in the Hall of Fame. All right. Who is the only man to have won 3 Best Actor Oscars? Who is the only man to have won 3 Best Actor Oscars? All right, that's our trivia question. Call 888-912-11. It's kind of hard, obviously.
Should be on your sports show, so I can get those right.
Okay. First caller with correct answer wins that tanning certificate. All right, don't touch that dial. The Best of Investing will be right back with Edward Brown and his special guest, Tyler Wennet from Pacific Private Money. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with my special guest, Tyler Wennet from Pacific Private Money. Question number 3. Who is the only man to have won 3 Best Actor awards? Oscars, excuse me.
I think I'm going to go over 3, but I'm going to, I know. I'm just going to go with Johnny Depp.
No.
He probably has.
He does have dark hair, though. So we'll give you. Actually, it's Daniel Day-Lewis. So if you remember back a long time ago, he did My Left Foot. I think he played a guy named Chrissy Brown or something who was had multiple sclerosis or something like that, where basically he was kind of bedridden, but he learned how to play soccer and kick with his left foot. So he went for that. And then do you remember the movie There Will Be Blood? I don't know if you know that.
Actually. No.
Yeah. I didn't care. A lot of people like that movie. I didn't really care for it that much, but he did a very good job. And then he also went for Lincoln when he played Abraham
Okay.
Lincoln.
Oh yeah. That was good.
Yeah, great. He's a great actor. Great actor. Okay, so Tyler, what is the biggest misconception about mortgage investing?
Yeah, I mean, I would definitely say, with alternatives, there's always risk, right? I think in any type of investing outside maybe your savings account or something. But so I think people do assume it's risky and they maybe tie it to. I mean, there's a lot of misconceptions about debt funds and
Yeah.
equity versus debt. But I think ultimately the reason why I've kind of fell in love with this space is the fact that you're at the top of the capital stack, right?
Yeah.
We were just talking about first and seconds, and again, I've never dabbled in the second space, but when you're in first position, I mean, you're pretty much ahead of everybody, right? So, I mean, you ultimately, again, if it's performing, but you're highly secured against a piece of real property. I know there's other types of debt investing as well, but you have legal protection from a lender standpoint, and then unlike equity, you have foreclosure rights. You have priority repayment. You're at the top of the list for from a borrower standpoint. I mean, I came from did a little bit for about a year and a half, helped a couple companies, do some development deals, which is pure equity, and it's again the market changes. A lot of
Yeah.
commercial loans are all variable rate. Rates go up. Equity investors get the squeeze, right? And then if worst case scenario, the project goes south, you're pretty much out everything. And I think the most sophisticated families understand that protection of principal is by far one of the highest things that someone needs to value and not look at the tremendous upside, right? So at the end of the day, you can always foreclose on that, and again with lower LTVs, you can take back that property, and realistically that's going to offer more upsides potentially, right, than your monthly payment. So again, I think
you're ready for this. You were mentioning about first and seconds. Once I did a sixth mortgage.
What?
Yeah, I had the second, and the borrower needed just a little bit more money to get to the finish line, so did a third. Needed a little bit more money. It's almost at the finish line, getting ready to refinance, but they needed to do a little bit more construction on this project, so I did a fourth and a
Is this
fifth.
a commercial? Is this a
Yeah.
commercial deal or? Oh, okay. Is it
And then
like
finally, the sixth mortgage really did get him to the finish line, and it got paid off.
did they sell the property or they just refinance with the bank?
Well, first he refinanced, then he ended up selling. But he
Okay.
did refinance with a real bank. But the only reason I did that was because I had the second, third, fourth, and fifth.
Yeah. Yeah, you want to see your project go through the end.
I wouldn't have done it if I wasn't in all those positions. I'm not sure how many other people have done a sixth mortgage before. That might be the record.
Was it retail or what kind of commercial property
It was an old. I mean, this building was literally 500,000 square feet. It was a quarter mile long of building. That's how big it took up a whole city block. And it was an old factory, and it was turned into live work along with some manufacturing and some storage. So there was a lot.
How did you get into that?
It was a borrower from other deals, and this deal was so smoking hot from the beginning that the borrower was able to buy the building for what would have been scrap metal.
Yeah.
He just scrapped everything and gotten all of his money back, and then just sold the land if he wanted to. We could see the potential in this.
Wow.
And so that one actually turned out pretty well. Okay, we've got one quick minute, and then we'll come back with another question here. How do you help people choose between funds or individual trustees?
Yeah, I mean, I would definitely say it depends on the type of investor, right? So, I mean, I think there's a place for both in a portfolio. You have people that are truly hands off. Maybe their expertise lies in apartment buildings or something else. They just want to park their money, which ultimately a fund might be the best option for them. But if they're active, they're interested in learning. They are familiar with doing due diligence on a borrower, looking at property valuations and whatnot. I mean, typically trust deeds usually have a better yield, just because you don't have, the fund admin and the management and stuff like that. So, but again, I mean, you've been in this space for a long time. I mean, you're never going to convince somebody into doing something they don't want to do or they don't feel comfortable doing, right? So, it's more of the education.
Yeah, and there's some people who they just don't want to do individual deeds of trust because they like the diversification,
Correct.
and for some reason there's like if you have one loan out of 100 that are not paying, your fund manager is still going to make a monthly payment to your distribution. But
Yep.
if you have that one loan by yourself and it doesn't pay, that income
0 or
stops.
100. Yeah. Yeah.
Yeah. And
You're
I've had
spot on.
situations where a borrower didn't pay for 2 years. So, all right, audience, stay with us. You're listening to The Best Investor. We'll be right back with some closing comments. Don't touch that dial. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Tyler Wennet from Pacific Private Money. Last question we have for you. What have you learned from working on both the buying and selling side of loans and the origination side?
Yeah, I mean, I would definitely say no buying and selling is definitely a lot more higher volume. You don't really get into the weeds necessarily, but I mean, it definitely gives you the aspect of how value loans, assess risk. And then I think on the origination side, which I've been extremely thankful for working, again, mentioned Rick, on how a good loan, a good piece of paper should be structured, right? In order to, be successful, but then also create resale value. I mean, you can write a bad loan that ultimately no one would ever want to purchase. And so I think, those aspects have been extremely helpful. And then, having both sides of the fence kind of is able to me to help guide investors, I guess, and not truly just being originations, and not knowing, when a loan does go into default, how are you going to liquidate it? What's the workout? And so just having that kind of all encompassing experience, I guess, has really kind of grounded me, or educated me on what a lot of people don't get, right.
Yeah, I mean, one of the first things, like, when a borrower comes to you, why are you coming to us instead of a bank? And then also you have to kind of think about what your exit strategy is.
Yeah.
I remember Rick telling me this one story where this guy came and he wanted to borrow money, and he says, "Yeah, I've got this land where right in the middle of it," he says, "I want to buy this piece of land. Right in the middle of it is an airstrip. So I'm going to own land on the left side and the right side." And Rick said, "Okay, well, and what are your plans for this?" And he says, "I don't know yet. That's why I want a 3-year loan so I can figure it out."
Okay.
Yeah, Rick said, "Yeah, no, with our money, you're not going to do that."
Yeah. Not great certainty there on what you're, especially with the noise and everything else. There's not much you could do with it.
And again, Tyler, how do people get a hold of you if they have more questions about either funds, non-performing loans, performing loans, individual trustees, your wealth of knowledge of everything?
Yeah, no. So, I mean, our website, pacificprivatemoney.com, we have, an investor page, a borrower page. It details all our different loan products, trust deeds, and the different funds. Or you can shoot me an email. My email is Tyler, Tyler, and then at pacificprivatemoney.com.
What kind of yields are you seeing in the individual deeds of trust nowadays?
It's kind of the opposite of what investors think, right? Because interest rates are going up. I think the bond, forget what it was, but it's almost at 5%, 5.25%, I think it was, or something. So, but I think private lending, to be truly transparent, there's a lot more private lenders out there. They realize the power of it. So, we have to be competitive in order to do loans for our borrowers. So it's kind of put, kind of a squeeze on both ends, right? But I mean, from a trust deed side, depending on the LTVs and all the different situations, I mean, you're seeing anywhere from like 9 to probably 11.5%. So
Yeah.
again, just
It's
depending
more,
on
yeah,
the demand.
it's more of a supply and demand of what money is out there. All right.
Correct. Yeah.
Wennet, you ready for our thoughts for the day? Here we go. So I love to exercise. I got up this morning, ran around the block 5 times, but then I got tired, so I picked up the block and put it back in the toy box. And at any given time, the urge to sing "The Lion Sleeps Tonight" is just a whim away, a whim away, a whim away, a whim away. I'm sorry, that's one of those bad there. All right, Tyler
Like the
Wennet,
block.
Pacific Private Money. Check him out, pacificprivatemoney.com. You can email him at tyler@pacificprivatemoney.com. Audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.